Good morning. At least it's morning as I'm recording this. This is Tom Alexander. This is the U.S. Stock Market Weekly Update. It is Saturday morning, October 25th. As I record this, this is the weekend report for the week beginning Monday, October 27th. And we have a market that is having a pretty extraordinary historic rally, actually. And in particular, the rally off of the April low has continued into new all-time high ground, and most of the indices led once again by the NDX and SPX. There are a handful of stocks, there are a dozen stocks that are leading this thing higher. But the trend is up. The trend is up in all time frames, and that has to be respected. So let's take a look at the last week and let's discuss what we might be looking at in terms of development going forward. So let's take a look at the chart here. We'll start with profile view. Now, I posted a series of profile charts in different time frames last weekend. And if you did not watch that video or if you haven't seen the report, please go to the website, alexandertrading.com, click on Weekend Update, Weekly Reports. I forget what it's titled. It's free. And you can see not only this report, you can download the PDF from this report, but you can also do the same for other weeks going back a couple of years. And you can see the progression of the analysis. Hopefully, you can see that I'm consistent in the type of analysis that I present, and maybe you can pick up a few things. Also, it would be very helpful and very much appreciated if you would like and subscribe, hit the notification. I'm trying to build a channel, and engagement is picked up by YouTube, engagement of any type. So your efforts in that regard would be much appreciated. Okay. So what we see here is an intermediate term auction of the S&P, and I have been posting the profile charts here for the past of a series of past couple of weeks. And this is sort of the gross view of the profile chart. Now, each profile unit that you see on my screen here is 1 month of trade. You can do this in any time frame. The auction process is in effect in all degrees of time, all the time. This happens to be a chronologically defined view of market activity month to month. So at least you're comparing apples to apples, oranges to oranges, et cetera. It's a pretty good intermediate term view. Now, let's take a look at what just transpired. And if you look at the profile chart as I have it here, which is compressed into that typical view that gives the nodes, the high volume nodes, and generally will give you some sort of a Gaussian view of the data. Sometimes it's more helpful. Actually, quite often it's more helpful if you split it out. And if we split it out, what you have then is a bar chart. You have a bar chart, but instead of bars, you have letters. But in this particular instance, you can see very clearly this Gaussian shape that formed coming into this week. And if you go back and you listen, I said, okay, this is a very specific market condition. We're going to have a sharp move. You're going to have a breakout of balance. It should be relentless. It has a certain personality. Okay, we broke out very, very sharply. What was this? Monday, followed through on Tuesday. And then on Wednesday, we had the blip. We had a little bit of a blip to the downside. Now, where did it stop? It stopped right at the midpoint. It stopped right at the high volume node. And I sent out a special report on Wednesday saying it has to hold here under a bullish scenario. Well, on Thursday, we immediately traded higher, and then we followed that up with a big gap up on Friday on the CPI news. Now, next week, we have all these earnings in these tech companies, so that's going to be another very, very interesting week. Let's take a look now at the bar charts. And, you don't want to marry yourself to one form of charting. Traders tend to form cults around market profile or candlesticks or, some other configuration of charts. What you want to do, you want to look at a chart, the chart or a chart, and through the lens of, all right, what is this telling me about auction market condition? Because I don't care what chart you use, you cannot deny that we are trading auction markets. And you also cannot deny that auction markets have a very specific purpose, and that purpose is to facilitate trade. And that's the genesis, that's the whole bedrock of auction market principles, that markets behave through a process of value as identified by trade facilitation. I won't go any deeper than that, but my point is, don't get married to a graphing format. Sometimes, frankly, I use I've been working with market profile almost since Stottlemyre posited the idea in the mid 80s. Okay. And it's a great format, but I trade off of bar charts. I very seldom trade off of a market profile chart. I use market profile charts to help me identify market conditions so I can drill down further in my strategy and my tactics for trading. And I find bar charts more effective for that. Okay. Anyway, so let's go to the bar charts. Okay, I have done this for all the indices. The levels that are important next week are on the charts, except for Friday's high or the recent highs in the various index that you're looking at. There's no upside resistance. We're in uncharted waters. I don't use magic numbers, projections, extensions, macro guesses, et cetera, et cetera. Now, I do know that the talking crowd is the current obsession is 7,000. Maybe we get to 7,000. Maybe it's the next magnet. It's not that far away. It's not quite 3% higher. We could do that in 2 days next week. It would not be a big surprise. Now, more important to me is the fact that we're breaking out of a mature balance area. This market should continue higher in an initiative manner, which leads me to believe we should see 7,000 probably next week. We should, quote unquote. Now, so what would invalidate that idea? Well, the first thing that would bring that into concern is if we close below Thursday's close, which is 67.40 basis cash. It would be a sell signal if we close below 66.53. It's and that's just auction market analysis. That's not some wild ass guess that I'm making. Okay, let's look at the NDX. Here's the index, similar story. We're up, gosh, 54% off the April low. That's just unbelievable. We're up 21% for the year. Here are the levels that need to hold to the downside. And we'll just go through all these. Here's the Russell. It's up 13.5%, up 47% off the April low. I mean, the move off the April low is late 1990s, early 2000s type of trade. And I've said this over and over, and I'm going to say it again here. I don't know where we are in this market. I have no idea. We could go up another 2 years, but we're somewhere in my mind between 1998 and 2000. Okay. Where exactly we'll know in hindsight. All right, here's the Dow. Now the Dow's only up 11% for the year, but it's up not quite, and it's up almost 30, which seems pitiful compared to the NDX and the SPX. But 30% in 5 months, 6 months. Gosh. All right, that's the Dow. Let's see. Equal weight S&P is lagging as you would expect. It's up not quite 10%, but it's up 28% off the April low. And I think that's New York Composite is up not quite, well, it's a little more than 14%. It's up almost 30% off the April low. Now let's take a look at the internals. VIX is dropping. VIX dropped very rapidly and sharply off of the high a little over a week ago, and it dropped more last week. This could be interpreted as bullish. If the market continues to rise, VIX will drop. Pay close attention, however. If the SPX and NDX continue to rise next week and you see volatility not moving or creeping up, it's a heads up. And then the last view I'll leave you with is that of the internals here. This will work. That's not the one. Here we go. Now, what this is, for those of you that might be viewing this for the first time, the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues. The histogram is breadth. Now, this has not been particularly helpful. It's never particularly helpful in bull trends, and could not have been a better example of being useless since the April low. Now it might get interesting, and here's why. When we've now taken out the ledge that we formed, we have not had the 10-day moving average of advancing issues broke above a level we haven't seen since July. What's significant about that? Well, again, it's all about context. If we were coming off of the April low, for instance, all right, like right here, this was a positive. This was saying there's a lot of momentum in this market. The market's going higher. But the context of this was coming off of this extraordinarily compressed downside condition. You can't say the market was compressed here. This was a multi-hour, not day, multi-hour drop. Now we've broken above. There seems to be some enthusiasm for the market. So I'm watching this carefully. Now, in mature bull trends, and again, you have to be careful when you're interpreting this perspective this way. You can identify lows much more effectively using this type of stuff than you can highs. That said, in bull trends, like say we had over here, when the 10-day moving average begins to get to an upper extreme, and what is an upper extreme? Well, there's no exact line in the sand, but we're approaching it now. What tends to happen, even if the market doesn't drop, is that it slows its trend and it becomes choppier. So I'm just watching this very, very carefully. Now, obviously, I've given the signals that would invalidate the bull trend. The signal that would invalidate the bull trend is a close below last Wednesday's low. That would be a sell signal and would indicate a high probability of some sort of downside move, probably of greater magnitude than any that we've seen since the April low, for a variety of reasons. Okay, guys, enjoy the rest of your weekend. And again, please, if you've gotten this far, please like, subscribe, hit the notification bell. I will speak with you again very soon.